Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when analyzing a real estate market. Go to sethferguson.org to download your free copy. Our guest today has over 14 years of experience in development and investment, has raised more than $80 million in equity, and his company has invested and developed over $250 million of real estate throughout Texas. Chris Powers is the CEO of Fort Capital. Chris, welcome to Purchase to Profits. It's great to have you on the show.
Thank you for having me. I appreciate it.
Yeah, we're really looking forward to this. So let's jump right in and talk about your real estate goals right now. Where do you want to take your company?
Cool. Yeah. Right now, we are very focused on industrial, kind of Class B industrial. We have predominantly been, I would say, doing, I don't know if the word smaller deals, but call it under 10 million. And the next big leap for us is starting to buy more portfolio size deals, kind of adding a zero to the deal size that we're getting into for economies of scale, the ability to recruit, and just kind of really opens the world for us. So I think 2 big things that you'll hear is just a more focus on industrial and focusing on kind of larger asset sizes.
Gotcha. And what were some of the signs that you saw or you felt you saw that made you think, okay, now is the time to start going after those bigger deals?
Yeah. Well, when you start realizing, a lot of my mentors have always told me that economies of scale and bigger deals are easier to do than smaller deals. And I never really realized that until we started doing bigger deals. And when you're a small company with not a lot of employees, doing a smaller deal is a little more easy to digest. But as we've grown, what we've realized is that for recruiting purposes, we're able to recruit better talent. The brokers that we deal with, tend to have a little more sophistication, the legal, the architects. I mean, at every level, it's more palatable to be working with, I wouldn't want to say the best, because there's a lot of great people doing smaller deals, but it just becomes a lot more efficient, let's just put it that way, as we do larger. It's actually easier to, I wouldn't say easier, but there's a lot more capital that chases larger deals than smaller deals. So being able to take on either an institutional or private equity partner as opposed to lots of friends and family, again, that's an efficiency thing. So it's just been the evolution. I started the business when I was 17 with a single family house, and the goal has been to kind of keep getting bigger. And at each step along the way, it kind of made the business easier to manage and operate.
Yeah, that's really cool. So take us back, because you started off in single family homes, and now you're going after Class B industrial. That's a different shift than most people end up going to. So what happened along the way?
Yeah. Really, when we started with single family homes, so I was 17 when I bought my first house. And a lot of that was just like, that's what you're capable of buying when you're 17, is a single family house, which I rented to students at TCU where I went to school. And as we've grown, rather than staying in residential, what we've really found out is managing where someone lives is a lot different than managing where somebody works. People in a lot of ways it's a lot less of an emotional decision than it is a business decision. It's just a whole different way to manage. And so people that are in multifamily today or in single family today, a lot of what makes them really special is being hyper focused on how they manage those assets and how they manage those tenants. Not to say that isn't the case with commercial. It's just maybe a more palatable management style. Industrial specific is a macro theme. So we just believe there's so many fundamental shifts in the world that are occurring right now that are making the Class B industrial space attractive. And so a lot of the way we think about the business, we also invest in a few other asset classes, but industrial is kind of one of our lead horses right now. Is we think macro and really kind of top-down approach from how do we see the economy, human behavior, and then how does that translate into a palatable real estate investment? And so high level with real Class B industrial, it's more infill in nature. It's one of the cheapest asset classes from like a cost to build, usually coming on large pieces of land with lots of parking. The optionality that you see, like if you're in Denver or LA, you see it used for cannabis use. You're starting to see blockchain miners do a lot of their blockchain mining in these type of deals. It's more palatable for small businesses. You're seeing creative office. All the big mixed-use redevelopments across the country, a lot of them are happening in old industrial parks. And then just that last mile, whether it's delivery of food, delivery of goods and services, that last mile is becoming critical. You're starting to see a lot more investors outsource, or a lot more businesses outsource a key component of their real estate into an industrial-like setting. And I could maybe wrap it up with something I think everybody can kind of wrap their head around is Travis Kalanick was the founder of Uber. He left and he bought a company called Cloud Kitchens. And what Cloud Kitchens does is buy old Class B industrial facilities in core infill locations, and then goes to restaurants and says, you know, your business isn't built for food delivery where there's food delivery people in the, you know, lobby of your restaurant. Why don't you outsource the majority of your mobile dining to a industrial commercial facility, and you have less footprint that you're paying $50 rents on, or whatever rents are in different cities. And you can build a more turnkey operation that's built for mobile, which we believe here is still in the very early innings of how that last mile delivery or mobile food service will work. So all that to be said, it's a big reason why we love industrial, the optionality, and that's why we're focused on it.
Yeah, for sure. And like you said, there's some really cool stuff happening in that space right now. It's really interesting to see. Can you extrapolate a little bit more? You mentioned how you take a macro look and then work it backwards. And one of the things I find with people that are new to the real estate investment space is they don't have that forward vision of where things are heading. What sort of, can you maybe walk us through maybe your mindset and how you really take a good look at that long term and then work backwards?
Yeah. So, macro can be macro like a global thing, or it could be the macro of like a region or a city or even a neighborhood. And so in the industrial thing, you could know nothing about real estate. And if you just started asking yourself questions like, what are big things that are starting to emerge in the world? Or what are things that seem to be consistent from, city to city? And if you just start by asking like simple questions like that, you start coming up with kind of these themes that are kind of the same no matter where you ask that question. So are people ordering more food online? Yep. Is cannabis becoming legalized around the United States? Yep. Is a lot of that indoor farming? Yep. You ask yourself questions, where do most new developments in urban infill areas occur? Is it just raw land that was purchased, or are these certain designated areas? And when you start asking a lot of those questions, you keep leading yourself back to industrial. Okay. Then you start asking yourself your question, is this just a fad? Is this early on? So if we took the food delivery, you might go look at a chart and say, how many people currently order food today? I don't know, 1 million. How many people ordered 5 years ago? 100,000. Okay, this is trending. How many more people could possibly be ordering food? 50 million. Okay, so there's a long way to go. So you just kind of start piecing yourself. And so for me, it's just asking a lot of the right questions. Another kind of theme that we think about, we're not necessarily investing in it now, is, home ownership. We think it's declining. We think that people are wanting to rent longer. The American dream of owning a home is not what it once was. And then we start asking questions, well, how many homes are being built every year? And how long's the average lease? Or how many times does a millennial move before they kind of find a permanent spot? Oh my gosh, millennials 20 years ago moved once. Or young people, younger generation, move once. Now they're moving 5 times before. Well, you can't buy a house 5 times before you're 30, so you'll probably rent. You just kind of you have those lead questions that start pointing to things. So we might look at buying, if we were into that, buying rental property. Or another big macro theme is it's very expensive to build. Construction is becoming a lot more expensive. There's a huge, every media line is, affordability is becoming tougher and tougher. Okay, what might happen? Well, you'll probably see smaller units. People don't need 5,000 square feet anymore. People are realizing that they can get along in 1,500 square feet. Okay, great. Where do you see smaller units? Oh, micro units or mobile home parks, which allow, smaller sizes, the ability to be more flexible, travel. So we just think about things like that. And then that leads us to an asset class rather than kind of leading out as like, we are just an industrial company and we're always going to buy industrial no matter what, is we really think about the theme we like and then building a team to execute on that theme. So will we be buying industrial forever? I don't know. Do we think the prospects are really good over the next decade? Yes. So you can expect us to be there for a while.
Yeah. No, I really like how you broke that down for us. So right now, what would you say the biggest challenge is in your business?
Oh man, I think not just real estate, but talent. Business is said as the war for talent. The low unemployment. There's a lot of people that are employed, and so we're constantly searching for talent. Construction costs rising. Not just even before the tariffs, construction costs were rising. A really interesting thing. So another thing we have done is we do a lot of investing in urban properties and have done a lot of urban development. I was talking about this morning with the rise of social media, the app next door where neighborhoods get together. It is a lot more difficult to develop in the inner city when you're always getting, you need a nod from a neighborhood. And what are neighborhoods composed of? A lot of people often that don't want a lot of change. And who are the leaders of neighborhood associations? Typically noisy people that really don't like change. And so getting things approved in the city and moving at the speed at which some of these cities are growing, there's a huge disconnect. I mean, I think kind of 2010 to now, it's taken 2 to 3 times longer to get a development approved. That's a lot more risk on a developer, commodity prices rising. And so you're just seeing projects, it's more expensive. You can't get the supply out that you necessarily need. And so, that's a challenge I was talking about this morning.
Yeah, for sure. And that's something people in the real estate space, they know how much red tape goes into developing right now. And it's certainly, it's no fun to deal with.
Yeah.
Yeah. And so, in growing your business, have you developed any routines or rituals that have helped make you successful?
Yeah, I think from a pure like building a company standpoint is really focusing on our people. I mean, to us, our people are the lifeblood of the company. And, I always, I'll say, if you walk by a building, all a building is a representation of what a lot of ideas and people working together. So architects working with brokers, who are working with engineers, working with a builder, with a developer that had an idea, but it's a bunch of people putting together ideas, and the output is a building. So we have focused a lot on our people. And the second part, which I think with real estate in particular is a huge opportunity, we spend a lot of time thinking about technology and how software and technology can make our business better. So real estate has traditionally been an archaic industry. It's kind of a slow mover. It's the largest asset class in the world. And so even in the last 5 years, you have seen this emergence of what they call real estate tech or built world tech, which is helps. We use it to raise money and manage investors. We use it to manage deal flow and workflow. We use it to manage our budgets. We use it to manage how our team works. And so, those two things, people and technology, are something that we are highly focused on to make our team more efficient and more valuable.
Yeah. And with the talent side, like you mentioned, unemployment is very, very low right now. How does it come? Let's say, because lots of our listeners are starting to build out their team. Lots of them are beginners or intermediates. What sort of tips can you give them in terms of attracting and finding that talent as they're starting their company up?
Yeah. I think one thing that some of these might sound obvious, and so maybe these were things that we didn't totally figure out really early on, but I think the number one is using personality tests and personality profiles when interviewing is critical. There's several out there. We've used the DISC profile. We now use a company called Culture Index, but it tells you a lot about who the person is. And when you're interviewing somebody, you will often hear kind of the best of who they are. And a lot of times, they're adapting to the situation, and it's hard to get a clean look at who somebody is in an interview. So that's kind of one step. The second, which again might sound really obvious, but I don't think a lot of smaller businesses do it, is when you're writing a job description, really asking the different people in the company, what do you think this position should be doing? Because it's very often that somebody's like, I need to hire someone. And then like the owner will just like create a job description is what they see it doing. But what we've found is by asking multiple people that would be working closely with this person, and maybe some that don't work as close, like how do you see that person? The job description tends to be a little different than if just one person wrote it who might have biases. And so personality testing and asking more people in the circle of influence what they think are huge ways to make sure you're talking to the right people.
Yeah, those are some good tips. And just out of curiosity, who was your first hire in your company?
My first hire was an assistant, and it to this day I couldn't live without my assistant. I mean, I really think of my assistant as a partner, and I remember really early on when I was a one-person company thinking like I could never afford an assistant. That would never work. And somebody really framed it as by getting back all the time that you would get by hiring an assistant, do you think that you can create more value or make more money if I told you you're going to get 2,000 hours of your year back? And the truth is, if the answer is yes, then you should do it. And I think what a lot of people do that haven't hired an assistant or hired anybody is they live in the world of like, I can do it better than anybody else ever could. And number one, that's not true. But number two, I think people get blinded by realizing how much of their day is creating value and how much of it is just like maintaining and doing things that aren't necessarily why you got into business in the first place. And so mine was an assistant. And then it was kind of after that, it was a partner. I think having a partner is super invaluable for lots of reasons, but it was an assistant first.
Cool. All right. No, that's really interesting. So let's go to a Keystone Deal. So a deal that made a big impact on you and your business. Is there one that comes to mind?
Yeah, there's one that comes to mind. The thing that I would call my MBA, so I didn't go to MBA. I did go to undergrad, but was a deal that we bought in 2011, and we assembled 37 houses into what was like a 6-acre contiguous tract of land. And I remember when we bought it, the intent was we had been developing some student housing before, and the thought was this was a really emerging area. This would have been the largest contiguous piece, and we knew enough to say having large contiguous tracts of land are very valuable. Now, this deal wasn't entitled, but it was in an area that it was obvious that the entitlements we would have hoped for, which was more dense zoning, kind of a mixed-use zoning, was appropriate. So we bought the deal. We thought, okay, we could either sell it to a multifamily group, we could build townhomes. I mean, we have a lot of optionality. And a huge institutional multifamily group came and approached us several months later and said, we want to buy it. Now, what I didn't fully understand was what it took to sell to an institutional group. They need what's called shovel-ready dirt. They can pull a permit and get to developing. So we were under contract for 18 months. Every entitlement that you could ever imagine that a site needed. This site had more hair than you could ever imagine, which I probably wouldn't have bought it had I known everything that was going to take. But after 18 months, we learned pretty much how the inside of a city works, entitlements, what institutional, and my world just infinitely expanded. Was like, I remember selling it to this group thinking, oh my gosh, I can't believe they're going to pay what they're going to pay for this, blah, 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 blah. And then you really look and you go, well, they're the biggest multifamily group in the country for a reason. And they were super diligent about it. I was really focused on their process and how it worked. And so we ended up buying these sites. We entitled it into one we replatted it into one big 6-acre tract. We rezoned it from single family to mixed use. We had to move a water line that ran through the middle of the property. We had to move some electrical lines, an easement. There was an old deed restriction. I mean, just everything that you could have imagined was there. But it really taught me how to unlock value, and that it's something that we do now. Like, we buy a lot of properties that have hair on them, because we have developed so much that we can see it through a developer's lens. Doesn't mean we have to go develop, but there's an enormous amount of value to be unlocked when you can get a piece of property to its highest and best use. And to kind of wrap up that kind of macro theme, is we believe the world is moving back towards the center of the city rather than out into the suburbs, and that land in the urban core will be more valuable than ever. And so we put a high attention on how to identify those pieces of property, and then how to position them to where big developers, institutional developers, whatever you want to call them, would be interested in them.
Yeah. And was this your first assembly deal that you did, or had you done some previous? Yeah.
It was the first assemblage deal we did. And if I would be lying to you if I said I had this like super grand plan that I knew how it would all play out. I just kind of knew more land was better than not. This is a really hot area. And I kind of knew what our options were on how to get out of it, but just would have never dreamt how it happened. And it really changed the trajectory of my career forever. Dealing with I think, yes, the entitlements and everything, but dealing with an institution and seeing how the biggest companies conduct their business and what drives them to do deals, and why our site and everything else really opened up the world to what was possible. At that point, we had been kind of a smaller hometown, acquirer, developer that was just going from one neighborhood to the next. Seemed like we had gone from, one country to the next at that point.
Yeah. And why do you think you were able to see the opportunity there with packaging everything together when other people didn't see that opportunity?
That's a really good question. Back to like personality profiles and how people see the world. I mean, there's a lot of people in the world that are built for getting things, seeing what's happening today and executing on today. And I think there's a lot of people in the world that look at the world as tomorrow. I've always fallen into the camp of tomorrow. And if you look at like people that, I'm not saying this is me, but if you just said, who are other people that think about tomorrow that people might recognize, you take like an Elon Musk or a Steve Jobs, they just saw the world so differently than what was here today. I'm not putting myself in that category at all, but for some reason, it's always kind of come natural to kind of see something and just say like, this has to be what it's going to be. So I think some of it is a vision, but it's backed up with facts and data, right? Like, there's more development coming on in the area. It's been inching closer to this site for a long time. Like, yes, I can't see it yet, but this makes a lot of sense. And really just trying to not look at, a 12-month window, but saying over the next 5 years, what are the odds that this area kind of happens? And then it goes back to kind of, okay, what other questions would I ask? Well, how many permits have been pulled within a mile radius or 2 miles in the last 10 years? That's public data. What has happened to tax values in this area? Okay, they're increasing. Clearly, values being created. And then I don't think there's any substitute for kind of talking to local people or talking to people in the market. Hey, what have you heard? Oh, we heard that this site's about to sell to so-and-so. A lot of what happens in development that I think is strategic is a lot of work happens before anything starts going vertical. And knowing that information, whether that's going and sitting in on zoning hearings and just being a fly on the wall and hearing what zoning cases are coming up, or seeing what's on city council's agenda. You can learn a lot of things through very public data that kind of give you this picture of like, something's going to happen here. And then it's really just having that conviction that even though I can't see it today, and even though I'm kind of betting on the future, it's backed up with a lot of data that the odds are this should happen.
Yeah, no, that's great. So you saw the opportunity, and then you started knocking on doors with all the owners. That's the fun part.
I don't think there's any substitute for door knocking or cold calling or sending letters. I mean, again, real estate's an inefficient market. It's not like the stock market where you can just go look at the price of something every second. And so, being able to find opportunities or deal with people one-on-one it's a one-on-one transaction as opposed to a 1 on 10 million transaction where things are so efficient. And so that was just kind of an early tactic. It's become tougher as the deals get bigger. There's a lot more sophisticated owners and professional owners, but when you're buying single family homes or smaller deals by nature from people who are not, call it real estate professionals, there's just more opportunity to kind of buy off market. And that's what we did.
Yeah, no, I'm really glad you brought up that example. That's a cool deal to talk about. So how has getting into real estate changed your life so far? Because I know you started when you were 17, so there's been a lot of change.
Yeah, I kind of like learn more about what's drawn me to it over time as time goes by. It's a people business. You can be very effective at it by being really good with people. It plays on strengths to being able to have kind of a vision. And in a weird way, it's something you can see, feel, and touch. So, people's lives are impacted by it. How they work is impacted by it, how they live. And so it's a reflection of like who people are in community. Like real estate is the one constant, no matter what city you go to, or, most cities are defined by the character of their real estate or their neighborhoods or how their cities were built, in both good and bad ways. I mean, a great city could be like New York City built. I mean, it's a miracle how that city was built out, but you can go to cities that, there wasn't a good plan early on, and it just the way it lays out isn't great. So I think it being a people-oriented business, it being something that, is a good reflection of how human behavior works and how the world is moving. And I think the last part is like, there's just never a dull moment. Like things are changing so quickly and there's so many opportunities. And I don't think there's any more exciting time than to be in real estate than right now.
Oh, 100%. And, let's look ahead, let's say a decade from now. Where do you see you and your business growing to that point?
Yeah. I think a couple things from an asset size. We want to get to a couple billion in assets under management. And that's not to have an ego about the couple billion, but going back to economies of scale, you really hit a really good point in just being able to get a lot of things done and have a overhead clearly defined and able to pay for it without having to do the next deal. There's just a lot of operational efficiencies, but I really kind of see us as looking more like a technology business than a traditional real estate investment business. And I would say that's not just for real estate. I think any company that is not paying attention to how technology can impact their company or their industry, it's really going to be table stakes going forward. I mean, the amount of change that's coming, if a CEO or the leaders of a company are not thinking about it, it's crazy. I mean, you think about this podcast, it's like 10 years ago, you could have never thought that you would be broadcasting your thoughts for very little money to millions of people around the world have access to it. And 10 years later, there's people that do this for a full-time profession. Yeah. You no longer need thousands of employees and huge office buildings and lots of production to put out great content. And so if you just equated it back to podcasting, like how much you can get done now with a couple microphones, some headphones. I'm sitting here on my phone on Zoom, and you just say like, how, if you mirrored that to like the real estate industry is like, man, there could be a lot of radical change and most of it's going to be driven by technology. So I tell our team here all the time, I don't know exactly what form and shape that comes in, but we are trying to stay at the forefront of technology and make that a kind of a core value or a key strategic way that we grow.
Yeah, no, and like you said, I think the next, 10, 20 years are going to be huge in terms of like the dramatic shift we're going to see. It's going to be really cool to see.
It's awesome.
Yeah.
The world's a great place. It's getting better. Like,
oh yeah, 100%.
Yeah. The media doesn't often want to, like, that doesn't sell as well as negative news, but like I tell people here all the time, the richest person in America didn't have a refrigerator or air conditioning in the 1920s, John D. Rockefeller. Now everybody has that. I mean, so from a quality of life, the world continues to improve dramatically. And there's never been a time to be in business or be alive for that matter than now.
Yeah, for sure. So Chris, if somebody's looking to get in touch with you and learn more about what you're doing, where can they find you?
Yep, they can find us at www.fortcapitallp.com. They can follow me on Twitter at Fort Worth Chris. I actually have a podcast, the Fort Podcast, on iTunes and everything else. And yeah, if they go to our website, they can see all of our different channels. We have a newsletter. We have social media pages on Instagram, Fort Capital, Facebook, Fort Capital, LinkedIn, Fort Capital. You can find us.
That's awesome. Well, Chris, just want to say thanks so much for taking the time today and sharing those awesome tips with us.
Appreciate it. Thanks for having me on.
Yeah, it was my pleasure. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.
Thanks, Seth.
That was great. Thanks for doing that.